John Murphy, BofA Securities Auto Analyst. He has a neutral rating on the stock with a $1,300 price target. And John, I do love cars. I do. And I grew up in the old days where you could expect like cooler models coming out, and I'm a little bit tired of the top of the line Tesla. And just I love it. It's a great car, but I wish he would do that. I wish he would do the truck. I wish he would do maybe more. But he's come a long way to get to where he is right now, and it's not really a demand problem. He doesn't need to engender any demand, does he? He's working on supply and getting that done, and that probably is, he's in a rush, but you shouldn't be in that big a rush. This is a supply issue.
Joe, thanks for having me. I mean, I think that's very interesting. I mean, the new product cycles in the auto industry, even for a new company, newfangled company like Tesla, are really important to drive consumer demand and ultimately long-term growth and open up other swaths of the market. So if you're looking at Tesla and you're, an Uber bull, you're saying this is going to be a company 5 to 10 years down the line that it's going to do 10 million units plus, right? The average selling price in the fourth quarter was about $52,000, right? So doing gross, good margins with a $52,000, ASP is fairly easy. But what Elon now seems to be doing is maturing the company and saying, listen, I'm going to just spew cash flow right now, not invest in the future, so that I can build my balance sheet so that maybe I can invest more aggressively in the future as opposed to going to the market and raising capital. So it seems like a real shift in the maturation of the company here. It's maturing, but this lack of product this year is really weird, Joe. It's a good point. We estimate there's going to be 29 other EV models launched in the market. So the market's coming for him. And when we look at market share going forward, he's going to lose a lot of market share. We can get into specific numbers, but we expect he's going to lose about 50 points of market share in the EV market over the next 3 to 4 years.
Just with competition. And I'm sure the battery, the strides trying to be made there, that continues apace, right? I mean, and that's important. I'm not, I do go more than 500 miles. I don't want to sit around, although, my idea has always been to put the charging station at a Waffle House, because then I've got 35, 40 minutes, and I'll happily spend it there. But that hasn't come to pass. It's still, you got to fill up twice to go 600 miles. You got to charge twice to go 600 miles?
Yes, yeah, you do. But I mean, I think for the majority of driving, home charging destination chargers work fairly well. I don't think the charging is really the gating factor on EVs at the moment on growth. I mean, I think really it's a question of cost. It's how many people can buy a $52,000 vehicle, and that's less than 10% of the U.S. market right now. So the whole industry, including Elon, has to drive costs down significantly. And I hate talking about government intervention and incentives, but the Build Back Better plan, EV incentive package, really would be helpful to the U.S. auto industry in making this transition to EVs. So I mean, not a big fan of government intervention, but this one would make sense.